Prasun Gajri, Chief Investment Officer with HDFC Life Insurance Company, joins us with his market take. Prasun, good to have you back and thank you for joining us. Prasun, if I construct the current market setup, Nifty is looking slightly jammed, news flow has dried up completely, and mid and small cap stocks is where the action has shifted. What do you make of the current market setup? Are you a bit surprised with what's happening in the side market, in the broader market?
Actually, no, we are not surprised. I think this is the kind of market we have been expecting. And it's a market which will continue to surprise you either on the positive side or the negative side, because really there's no direction to the market. It's a very short-term view given the fact that elections is going to be the dominating theme for the market. Until they are out of the way, market cannot really position itself from a medium to longer term perspective. So clearly at the end of December, everyone seemed to be fairly bullish, and the anticipation was the rally would continue into January. We have seen January come, and we have seen a little bit of correction virtually every day in the market, and now everyone seems to be a little bit bearish. So my sense is this is the kind of mood which will continue to prevail. You would again have a phase where market reverses and moves up as well. So not an easy market to play if one is to purely base it on the short terms. I think that is the way it is, and one has to move on with that, because unless you get the political scenario out of the way, the markets cannot really decide on which way they are headed for.
So,
Prasun, what's your sense? Does it seem like in the near term perhaps 6400, 6415 would be a ceiling for the market? Because increasingly the developments in New Delhi actually lead you to believe that, you know, it may be just Aam Aadmi Party winning majority, and that would really not lead to any party being, able to form a government, and that would be anti the market momentum.
Look, I do not want to hazard a guess in terms of how the election outcome is going to be. I mean, maybe there is obviously going to be some element of uncertainty which has crept up because of Aam Aadmi Party. Now, whether they do better at the Lok Sabha elections, whether they do not so well, is a difficult question to answer, so I won't get into that. I think whether market hits 6400, 6500, again a tough one to answer, but let's look at some of the factors which could really aid the market moving up. One is clearly how the inflation really pans out, and if data is to be believed, we could expect a more benign number next week. And if that leads to RBI holding its ammunition and not raising rates again at the end of January, that could give a fillip to the markets. I think that is number one. Number two, one must not forget that the fall in the Indian markets is also led by fall virtually across the entire emerging market spectrum. And there has been money which has been moving out. Now that could be a delayed reaction to tapering. I don't know what really is going on that count. But if that reverses, you could see the market really moving up again. So I would not be too perturbed by this fall. I would want to continue to maintain a more positive frame of mind as far as the market is concerned, and work on building up a more balanced portfolio rather than being too aggressive or too defensive at this point of time.
Prasun, but I'm just getting a sense that there is too much of bullish chatter on the street. I've not got a single bearish strategy report for 2014. Everyone on street is convinced that inflation will go down and earnings will move up. Do you think this consensus could backfire? Because historically the only thing which backfires is consensus.
Well, very well it could happen that way, but it's not that the consensus is always wrong. So look, if whatever data points are available today are pointing towards a better macro condition, there's no doubt about that. Yes, they will be, and obviously we will get better earnings in FY15 than we have seen over the last 3-4 years, because we have really not seen any earning growth coming through. So clearly those factors are a given. Now how markets really react to that, whether that is completely priced in or whether that really needs, market needs to move up further to kind of support that, remains to be seen. I think what matters is we get a credible government at the center, whichever party comes through, which is able to take some good decisions. And if that happens, I think optimism comes back to the market. FY15, I think the macro is largely priced in. People know there is some improvement. It's a slow improvement. If we get a good credible government, I think the consensus would move towards that this improvement in the macro could get better as we get into FY16, and therefore there could be earning acceleration as far as FY16 is concerned over FY15, and that is something which the market can really, if that happens, markets can really move up. So therefore what happens post the elections becomes very, very crucial in that aspect. Currently, therefore, I do not want to be too negative. I mean, this is the kind of market where you do not want to be too negative. At the same time, you do not want to go overboard and say I'm only going to look at beta, and as they're going to be definitely going to be a pre-election rally and something of that sort. Difficult call to take. So what I would really do is to be a little bit more balanced across sectors, not go terribly underweight, overweight either on any sector, and also have a little bit of a mid-cap orientation to the portfolio at the margin, because given the underperformance and the undervaluation of some of these names, I think they could really add alpha to the portfolio.
When you say mid-cap allocation, Prasun, would you still stick to IT, pharma, names which have delivered performance, are in a short bet even when it comes to the mid-caps, or would you venture out into the high beta, non-performing ones as well?
Well, as I said, I would like to look at it in a more balanced way. So if I want to be even defensive in some of the sectors, I would not go terribly overweight on any of these sectors, especially FMCG. I would in fact be a little bit underweight. And therefore I would be happy looking at names across sectors, including the mid-cap space. Wherever the valuation comfort is there, balance sheet is not stressed, and fundamentally there's nearly nothing wrong with the company, except the fact that the macro conditions have meant that there has been an earnings slowdown. Now, those are the companies which you'd want to get into the portfolio irrespective of the sector. I think that is the way I would want to position today, and then take a call as we get closer to the elections and the election results come out.
Is it a good idea to wait for the election outcome? Because if the election outcome is clear, the day after the election outcome or the day after the result, market will only gap up.
Well, tough to say. I think markets have got both the last two elections wrong, both in terms of what the expected election results are and the reaction of the market post the results. I think both the cases, both in 2004 and 2009, markets have got it wrong. So markets don't have a terrific record as far as predicting election outcomes are concerned, or the market reaction post the election. So I would not really want to hazard that guess. I think take it as it comes, be very mindful of the data which is emerging, and do not lose track of the basic earnings and the basic macro data in light of what is happening on the political front, because eventually that is the only thing that matters. So yes, there is noise on elections, it matters, and it matters terribly because we need some policy direction. But yeah, one cannot really predict the kind of market reactions which can happen post the election. So that's a very difficult call to take.
How do you propose one should bet on consumers? The street is divided on what is in store for the consumer sector for 2014, because the rural part is holding on, urban part is slowing down. Are markets pricing in already some degree of slowdown in consumers?
Well, my sense is even the rural is slowing down a little bit from where it was, and these are the indications you are getting from some of the staple names. And therefore, I'd be a little bit cautious on that sector. Valuations haven't really corrected that much, and therefore, if I were to play defensive, my preference order would be more pharma, IT, and then FMCG rather than anything else. And within FMCG also, I'd be selective in names where I do see earning growth coming through. And yeah, that is the way it is, unless you get a very, very terribly uncertain scenario post the elections, in which case FMCG could still do well. But I'm not really betting on that at the moment, and therefore purely from a fundamental perspective, my defensive orientation would come through pharma and IT, not FMCG.
Prasun, when it comes to the earnings though, considering tomorrow we're going to officially kickstart it with IT, what's the sense that you're getting? Sectorally, where can we see good earnings emerge, and where do you think earnings will continue to remain under pressure?
I don't see the pattern really changing too much this quarter from what it has been in the previous quarters. So I would believe that we would see reasonable earning from IT, good earning from pharma sector. FMCG would be under pressure. I think the banks would be under a little bit of pressure, clearly, though at the margin you would probably see a little bit better earnings on a relative basis by PSU banks because of some slowdown in slippages which they have been seeing. But the overall pattern of the earnings would be is very likely to be similar to what it was last quarter. So I don't think there's too much of expectation from the earnings either way. So expectations continue to be low, and the pattern is unlikely to change this quarter as well.
What is your take on the global situation? Where do you think the surprise could kick in for 2014? Will it be Europe, will it be China, or will it still be US?
I I think it will be the US very clearly. I think the growth and the data points from US continue to surprise on the upside, and that is something which is actually very good because US being the largest market, and Europe is holding on, so it's not that Europe is really pulling things back, and you could get a little bit more surprise from Japan. So I think the global economy could as a whole surprise positively in 2014, and that is something which is going to be positive for equity markets across the world once you get through all these technical issues of taper and the political situation in India, etc. So I am pretty bullish on that aspect.
Fair point. Prasun, let's talk about flows. Any ray of hope? Are things looking better?
Sorry, I couldn't hear
flows,
you.
The constant feature or the written for 2013 has been constant selling by DIIs. 2014, has the trend changed? Is there any ray of hope?
Right.
Or still a long winter?
That's a tough one to say. No, I don't think things have changed materially. I think we are still seeing some pressure. And moment the market, say Sensex touches around 21,000, 21,000 plus, you're seeing a lot of people coming out and redeeming, assuming that this 21,000 is same as 21,000 seen 5 years back. Unfortunately, that is not true, and but that is the way the retail investor is behaving. I hope that changes, but it's a very difficult call to really say when that really happens. Maybe the market needs to sustain itself for a while before that happens. So that is still not really happening in any meaningful manner.
You know, market history tells me that markets always peak out when there is local participation, retail participation and local euphoria. Forget about euphoria, there is hardly any participation. So do you think it's the lack of ownership and under participation which will continue to drive markets up? It's the pessimism in the system which perhaps is the biggest ledge for the next bull market?
Yeah, to my mind that is a positive, effectively, because the domestic investor is still not convinced fully that this is a market really to enter, and I think also on a relative basis they believe other asset classes are doing well, but one has to really look at the fact that in fact gold underperformed in equities in rupee terms last year. The fixed interest markets did give some positive returns, but once the rates started rising again, I don't think the returns were really great from the fixed income space as well. So yes, this pessimism is to my mind a positive. It's a moment we see some sort of optimism coming back to the markets giving a little bit of an uprun. You could see a lot of money moving back into the markets, which could make the next leg happen. And therefore, I would, as I said earlier, would have a positive bent of mind towards the market today, without going overboard.
Prasun, good chatting with you. Appreciate you taking the time out and speaking with us.